Hi everyone, good morning. I am Santosh Mahapatra. Today I will explain what are the features of income tax. What are the features of income tax? In previous class, we have discussed two elements of income tax. The third element, that is feature of income tax. So here the first feature of income tax is that it is levied by the central government. It is levied by the central government. It is charged by the central government from the general public. So all income other than agricultural income are taxable under the Income Tax Act. So agricultural income is exempted. So there cannot be any tax to be charged on agricultural income. That is first, levied by central government. This second one is direct tax. Yes, income tax is a direct tax. The liability to deposit making TDS depends on person. It is the primary responsibility of a person to deposit income tax from his income earned. That is second. And the third one is annual tax. Yes, income tax is a annual tax. It is charged and collected throughout year, but it is finally assessed annually. It is finally assessed or calculated annually. So income of a particular year is charged to tax, and that year is known as previous year. So we can say that income tax is an annual tax. And the fourth one, tax on person. So the income tax is charged on person, and who is a person? It is defined by the Income Tax Act 1961. So it includes, the person includes individual, HUF, firm, company, local authority, association of person, body of individual, artificial juridical person. So they are called SAC. And another feature is that tax on income. So here, tax on income, and again the Income Tax Act has defined what is income. It includes which income are chargeable to tax. So the income may be salary, the income from house property, the income from business profession, the income from capital gain, and the income from other sources. Generally, there are five major heads of income. And the next one is income of previous year. Yes, income of previous year is assessed to tax immediately following the financial year. So income of the previous year, the year of earning. So previous year is known as the year of earning. So income of previous year is assessed to tax immediately following the financial year. So that is assessment year. So we can say that the year of earning is known as previous year, and the year of assessment of income is known as assessment year. And the next one is applicability. So Income Tax Act is applicable throughout India, including Jammu Kashmir. The next one is sharing of taxes. Yes, sharing of taxes. There is the income tax which is collected from the general public by the central government is going to be divided and shared between the central government and different state government in a particular ratio, in a particular guideline which is already developed by the Ministry of Finance. Then sources of revenue. Yes, income tax is a major source of revenue by the central government. So the major source of revenue, the revenue which are collected in the form of income tax to be spent for the welfare of the society, for the development of the country, for restructuring the economy of a country. The next one, rates of tax. Rates of tax. Yes. Tax rate. Yes, there are different rate of taxes. When a person is earning more and more income, he is going to pay more and more taxes. It will mean that tax rate increases with increase in income, And the next one is that administration. The next one, yes, the income tax department is under the administration of Central Board of Direct Tax, and it is a central government department. So the Central Board of Direct Tax will issue notification, circular, letter to the income tax department, and the income tax official are bound to follow all the circular, notification and letter issued by the Central Board of Direct Tax. And the next one is tax on taxable income. Tax on taxable income. So here, when total income of an assessee exceeds the maximum exemption limit, then he will be charged to pay income tax in a particular prescribed rate. So as long as the income of an assessee is within the exemption limit, he is not going to pay any tax. But when the total income exceeds the maximum exemption limit, he will be charged to income tax in a prescribed rate or in a particular rate which is given in the Income Tax Act from time to time by the Finance Act.